retirement is just a few years away, it may be time to adjust your investing strategy.
The shocking statistic is that by the time somebody reaches 65, 95% they're dead broke, they're dependent on family, or they're dependent on government.
It's important that people deal with someone to make sure to prove and provide that guaranteed lifetime income.
Welcome to the Retirement Architect, David Reyes. Our program is designed to not only provide insight, but to educate and to give you the tools you need to help you design and build a rock-solid retirement.
Have you ever want to have one of those fat retirements maybe that your friend has or a coworker? Well, most of you don't have one. It's kind of phased out unless you're, they're still there, but less and less. And if you're younger, they're definitely not there. So this is David Reyes, Kprz Am 1210, and today we're going to talk about a law that's probably going to pass, a bipartisan law, and basically it's going to be the biggest retirement 401k overhaul in about a decade. And I'm excited to talk to you about it today because it's going to change, quite honestly, the way that people save for 401k plans and distribute income, which the reason we save money is to, in retirement or for retirement, is what? It's for income. And so we're going to talk a lot about this today because you're probably hearing this first from me. We pride ourselves on trying to stay ahead of the curve here with these types of issues regarding taxes and retirement. And so let me jump right into it. So what's happened is, and it's kind of funny, but what's happened is this bipartisan bill will allow, the biggest thing is annuities inside of a retirement or 401k plan. And what's funny, when I started in the business in 1995, all of my clients were educators, and all they could ever put their money into was annuities inside their plans. And the government used to really give us a hard time, or any advisor that was recommending an annuity inside a retirement plan. And their logic was this, which was very flawed. And what they said was, because annuities are tax deferred. If you put your money in an annuity, it's going to be tax deferred. Okay, then it's taxed as you take distributions, just like a IRA or 401k, same thing. So the argument by the government was, well, why would you put an investment that's tax deferred inside of a tax deferred IRA? Which was ridiculous, because what they were saying is you're putting a tax deferred vehicle inside a tax deferred vehicle, so what is the benefit? Well, that argument doesn't make any sense because annuities don't have the benefit just of reducing taxes or deferring taxes. The annuity itself has value because you can get lifetime income. So what's really ironic is now you're seeing, now this is 15 years, well, 23 years, I'm sorry. I wish it was only 15 years. 23 years I've been in the business. This is the first time that really the government is really getting their arms around, which is crazy, that annuities themselves are very, very good for 401k plans. So let's talk about some of the areas where they're looking at adopting this. And there's a really good article in last weekend's, actually 2 weeks ago, the edition of the Wall Street Journal in their money section. And it says a primer to annuities in a 401k plan. So why would somebody want to have an annuity in a 401k plan? Well, number one is for lifetime income. Now, most of you don't have a pension, but how would you like to create your own pension? And so that's what we do. So Social Security you have, it's like an annuity. You're putting money away, you're deferring it, then you get income. It's taxable, 85% taxable. Same thing with an annuity. What if you could take your 401k plan, roll it over into, when you retire, 59 and a half, roll it into an annuity, and basically create your own pension and get lifetime income. So this is what we do for our clients. As part of our income planning, we use many different resources, real estate, dividend funds, or dividend stocks, lots of other different types of strategies to increase income. And annuities are probably one of the best ways, in addition to other conventional planning, to maximize income. Right now bonds are really getting whacked. So if you have bonds, which is usually, okay, David, I own bonds, I have a diversified portfolio, and I'm okay. Well, if you looked at your statements lately, you've noticed that your bond funds are going down, and some significantly, because as rates rise, the value of your bond goes down. So is that a great diversifier? If you're a traditional advisor, you're saying, okay, I'm going to put my money in stocks and bonds. I'm going to mitigate risk so I have better returns and less volatility. Well, right now that's wrong. we have a whole philosophy where we really don't use that much bonds anyway to create the downside protection and income. But I'll say that for another time. So, annuities are a great way to reduce risk, to increase income. So I'm actually very glad that the government is looking. I'm sure they'll pass this law because it just makes too much sense. So if you want to reach out to me and actually talk about how to put annuities inside of your 401k or IRAs, give me a call, 1-800-611-1967. That's 1-800-611-1967, or go to our website, brand new website, reyesplan.com. That's REYES plan.com. In fact, our new site we're really excited about. It's really does a better job of really distilling down what we do from a planning perspective and from an investment perspective, because we believe that we do things differently, not just to be different, but to be better. And so, the website we're excited about, so you actually can go there, get a lot of good information. Again, we'll talk about our investment strategy, our retirement income strategy. So I want to share with you a couple other ideas about 401ks and annuities. So one of the things they're talking about as well, which I'm not really sure on the law yet because it's not out, and I hope they do this, is they're talking about potentially saying, okay, you have your money in a 401k plan. I believe, this is what I read, if you have a 401k plan and they don't offer annuities, you could roll it into your own IRA. Now, I hope they allow you to do that, because that's a massive benefit as opposed to having to wait till you're retired. And the reason is, the sooner you put your money into an annuity, the more it grows and more the income grows, just like Social Security. If you defer Social Security from 62 to 70, you're getting about a 7% compounded rate of return, just like an annuity is the same thing. You put your money in today. Clients always ask me, David, when's a good time to put my money in an annuity? I say, now. They say, well, why? Why don't I put it in when I'm retired? Well, put it in today, you're 60, and you retire at 65, you're going to have 5 years of that deferral, which is not necessarily made to increase the value of the policy, but really to increase the income. So again, these are things that I'm excited about. I don't think it's going to happen tomorrow, and these types of big changes take a long time. This could be 1 or 2 years out, but I'm just happy the conversation is happening. So some other areas, let me see what's important over here. I'm going off this article. Do I need an annuity is one of their questions in here, and one of the things that they say in this article is they say, well, one of the things you sacrifice, there's two things you sacrifice with annuities. One I disagree with, and the other one I kind of disagree with. One is that you get a cap on the upside of the stock market, because a lot of these are what's called fixed index annuities, and what happens is your portfolio, your annuity is tied to the S&P 500 or other indices, and they might have caps of 5, 10%. Wow, that's high. Probably 5, 6%. The best ones out there have about a 50% cap, meaning you get half the S&P 500, but none of the losses. So that's a great one. So one of the arguments against annuities inside of these plans is that you limit the upside. Well, half of making money is not losing money. There's a Warren Buffett quote that says, what's rule number 1 about investing? Don't lose money. What's rule number 2? Don't forget rule number 1. And that's how we think about money. When you go through one downturn in the market like 2000 or 2008, you're done. The average client I sit across from has risk in their portfolio where they would lose about 30% or per million, about $300,000. I mean, that's just devastating. And that's average. Some more, some a little bit less, but that's somebody that I look across from like you that says, David, I'm super conservative. Well, the reality is that we invest more aggressively than we think, and even though we think we're conservative. So again, I don't want this to bite you in the butt, because the problem is that we can't do a do-over. I call it like, getting in a car accident and then wanting insurance. We want to purchase this before. So if you want to have me do a complimentary second opinion, which is much more, I guess, a bigger opportunity for you, much more, just more, I guess, collaborative in the sense that we look at everything from your tax returns to your pensions, if you have one, to Social Security, obviously all things like that, especially estate planning, again, which most advisors don't deal in 2 areas, estate planning and tax planning. My partner's a CPA, so all these things we'll look at. We'll look at the risk you hold in the portfolio, the amount of fees you're paying. Typically, we'll reduce fees for clients about 25 to 50%. We'll also create a retirement income plan for you, and also a written plan. So if you want to get this comprehensive second opinion, give me a call, 1-800-611-1967. That's 611-1967, or go to reyesplan.com. That's REYES plan.com. So let's try to get through this a little bit more, because I do want to give you as much information. We're talking about annuities inside of a 401k plan, and never happened. And we're talking about institutions, corporations now having these plans which are going to give you the opportunity to have lifetime income. So they finally come around to the idea that we can create our own pension out of rolling our 401k plan over into an annuity and creating lifetime income that we can never outlive. So again, if you want to have more information on how this works and how to implement annuities inside of your IRAs, 401ks, or such, just reach out to me personally, David Reyes, your retirement architect here on Kprz. 1-800-611-1967. That's 1-800-611-1967. Or go to reyesplan.com. That's REYES plan.com. We're going to take a little break here, and we'll come back and talk about the market risk right now. Facebook lost 20% of its value in a day. It's the biggest loss of market cap by any company in the history of the stock market. This is David Reyes, Kprz AM 1210.